Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here on February the 12th, 2020 with a Forex market analysis for you. We're going to do a breakdown and see what the major currency crosses are doing as we head into the middle of the week. And we have our disclaimer up real quick just to remind you that this analysis is just for illustrative purposes and educational purposes only. Now we're going to jump to our live screen. We have the www.forex-trading-unlocked.com website pulled up, and we already have our workstation page going, and we have the Euro US dollar chart already up. As you can see that the Euro US dollar is falling back on supports, but has not made a newer move low as of yet. Yesterday, the market continued to trade lower, but settled for the first time slightly positive in almost 2 weeks. The question is, do we have a short-term bounce forming, or is this bear that's going to continue to ravage support? Well, we're coming into this area where historically the Euro US dollar tends to find support no matter what the reasons are going on. Although right now we have a lot of fundamentals that are definitely pressuring the Euro US dollar. So we're right in front of the US market openings. We still have a couple hours left in the European trade. They had some bad news. Their recessionary numbers again for their manufacturing in Euro in the EU, excuse me. So there's a lot of heavy weight on the Euro as far as giving it more bearish momentum than anything else. So, however, the US dollar seems to be ready for a little bit of a correction. As of yesterday, it worked its way that way, and today it's kind of quiet. So it could be just a little bit of a pause before we continue to pressure the keep the US dollar rally going against most of the other broad currencies, especially the euro. However, right now we have a little bit of an indication that yesterday may have set a short-term low. So for your aggressive bulls, we're using that as our risk level down there at $1.0892. Anything above there has us targeting a correction back up towards this last swing high here around 109.50. 110.95, which puts us right in the middle of this upside target range, which is $1.1108 down to $1.1066. So are we calling for a rally? Absolutely not. Anything can happen. The fundamentals and the technicals have already run out. They're pretty much overdone for selling right now. They're ripe for a little bit of a corrective move, or at least a sideways consolidation. So for your range traders, I think you're going to have a little bit of a delight today in the next couple sessions. I think you're going to get a little bit of a move, and then after that, it's pretty much going to subside. So there's just not enough to give the Euro US dollar a lot of credence to get a rally against the dollar, even with the US dollar falling apart. Now, however, if we have a failure here from yesterday's low at $1.0892, then we will probably see not only just a continuation of this bearish slide, but we could actually probe down into levels that we haven't seen in a very long time. So the bearish momentum is striking right now. The slope is pretty steep, excuse me. So the market is ripe for a correction. However, we never want to try and pick a bottom and catch a falling knife. So we're just giving you right now the way it looks. So with that, we're going to follow it. Now, if there is a turnaround in the US dollar and continues to hit support, then the euro would probably be one of the currencies that gets a little bit of a gain from that. So let's see how the dollar is shaping up versus the other currencies around the globe, especially in Europe. We have the British pound US dollar that now is still continuing to rally for the third day in a row. Now here's the one thing that might give the euro some lift. If the major currencies start to turn versus the dollar, the euro may just get some support just because of that. Now, if that's the case, then we will see probably more of a directional move in the other currency crosses. The euro, even for a rally, we have a big target zone. However, it's going to probably take a little bit more of a grind and a bigger turn in the dollar. Now, one thing that does support our dollar falling against the major currencies is this right here. We have a 3 inside out buy signal that occurred as of yesterday in the British pound US dollar. We're having follow through today. Not much, but it is positive. And with this signal right here, this locks in this low here at $1.2866 as our key directional pivot. All trading above here has us in rally mode, targeting this upside target zone, and then we have this the $1.3208 pivot from this last swing high. A rally above that takes us off the neutral path and definitely has us in a bullish outlook for the pound US dollar. Now the pound has been beaten up versus the dollar like the rest of the currencies because of the coronavirus. It seems like we're getting a little bit of a reprieve in the markets today. Not that things are necessarily getting that much better, but things are being handled, and the shock seems to be over. Plus, the market has absorbed a lot of it already. The market's always forward thinking, forward reacting. So with any luck, if the virus doesn't continue to escalate at a very, very large rate or whatever, or as long as things are contained, which it seems things are not spreading around the rest of the world in pockets like it is in China. So that definitely is giving a boost to some of the other currency crosses around the globe. So here we have, once again, this 3 inside up buy signal. We're going to follow this for the next couple sessions. Right now it targets this upper band over here. Now if the dollar does get some absurd rally because the numbers start growing, remember there's a big fundamental push right now in the markets right now with the dollar for flight to quality because of that. As long as that starts to wane, we should get a pop in the pound for sure. Now we have made a lower move low, so we've made a series of lower move highs and lower move lows. So this isn't a neutral to bearish posture right now, and they're showing the intermediate term. So we'll see if this counter trade starts to get us up into this target zone and sets a lower move high, or if we can get into it and take out especially this $32.08. Well, then all bets are off for the bears, and I would say you're going to be very hard pressed if you start selling into a rally up in that area. So we will watch that and see how that manifests, and it'll probably be over the next week to 10 days to get that to come to fruition. So now let's look at the one currency that has been a bull against almost all the rest of the currencies in the world. It's this the Swiss franc. However, it hasn't been for obviously the past few weeks. With the dollar strength, because the coronavirus fundamental has driven the bears out of their minds in the US dollar Swiss trade. So the bulls have been grinding higher, and now it looks like the US dollar Swiss is ready for a little bit of a retreat. It's been a bull because of the coronavirus. I think that's where the US dollar has overtaken the Swiss, but as you can see, it's been in a sideways trade for the whole month of January, and now has come back only in the past week and a half into February. But overall, it's not very much changed on the year. So the Swiss is very strong versus the dollar, and any little bit of a slack in the U.S. dollar index most likely is going to mean that the Swiss is gaining from that on the U.S. dollar. We had a short-term sell signal that was occurred yesterday with the higher move high. We'll see how today's trade manifests as the U.S. markets open. So right now we are a bear. We're using this last swing move high of yesterday at 97.90 as our up and downside pivot. Bears against it, bulls above it. If we take out this high from yesterday, then I would say the US dollar bull is off and running as we try and make a run up towards this 99-cent level in the US dollar Swiss. Otherwise, I think your short-term sell signal here is we've made higher move highs, higher move low. Now the question is are we going to just have a little correction, or are we going to make a run for this 96.26? Any failure from here definitely means that the Swiss bull is back. And I would say that the fundamental, if the coronavirus starts to really fall out of play and we get back to normal fundamentals and technicals, then the US dollar Swiss is going to be one of the markets that most likely is going to erode very, very quickly. All right, now let's look at the US dollar JPY and see what's going on in Asia. So the US dollar JPY has been a bull no matter what has been going on with the dollar index, and we still remain that philosophy no matter what happens with the coronavirus or anything else. We are a bull. Higher move highs, higher move lows have been made on the intermediate term constantly in this market. It's still maintained, and right now, as you can see, we're hovering below this 110.29 pivot point, looking for a breakout to the upside, which targets around 112 to 112.5. This momentum here for this market could be skittish and a grind. It's the way it's been going through these highs. What we've had is more of upside explosions once we've had a correction. So we're not looking for this market to just blast through resistance and just go shooting straight up to $1.12. What's going to be 112.5. We're looking more of a grind, and any retraction off of that, corrective moves to the downside. That's where we'll probably see some more volatility before we find a higher move low once again. So right now we're looking to bust out to make a higher move high. We'll see how that goes, especially with the way the dollar index is going. It doesn't matter for that trade. Now, however, on the other side here, we do have a trade going on in Asia where the Australian dollar is finally getting some relief. It looked like it set a bottom a few sessions ago. It's making a run towards this 97.76 pivot right here, we take out this swing high, then we most likely are going to head into this upside target zone of 68.45 to 68.90. This market has a lot of fundamentals that are driving it down between the forest fires and the coronavirus. But the one fundamental that wasn't really taken into account until recently is Chinese inflation. That may be an uptick for the Australians because they are a core producer of commodities for China. So that one thing that hasn't been a variable that has been in play just because as of late all of a sudden it started kicking in with the economic numbers is one thing that when it's kind of funny when you have things are really bad, sometimes there's a light somewhere. Well, now all of a sudden this bearish trend, because the Australian dollar was pretty firm until this year began. Now it's been under pressure with just getting beaten up. But with this inflation stuff, inflation's always a bigger number than the ones that the future production, not the future production rate. The inflation number is much stronger in the short run than the expectations for production output in the future are. So that's why I think we're getting a lift and the bulls are starting to make a run here. I would be very cautious selling into this move. I'm not trying to pick a bottom down here, but it's very likely that if we fall short of this pivot and come back, it might be just a little bit of a basing before we make a run. So don't expect it to blast through this level. However, if we do get a breach of 67.76, you're going to be very hard pressed as a bear selling into a rally above there. I'd be very cautious. So if you're long right now, use the low from a few sessions back at 66.63 as your base for risk. Anything below there, obviously the bears will be having this market in hand. Now let's look at the New Zealand dollar, US dollar, which also has been under pressure for most of the same reasons as the Australian dollar, not so much because of China, but because of where they are in the trade in the world. And let's see if this comes up. Why is this not working? Let's see. Okay, let's see if we get it. There we go. Okay, so we have the New Zealand dollar, US dollar, which like a balloon underwater exploded yesterday. It set a low 2 sessions back, and then yesterday, boom, we had, I mean, it's amazing how markets go out like they came in. And this market, as you can see, like if we put, just to make it understandable for those of you that are not used to our videos here. Okay, so if you look at how the market traded into that high, and we're going to divide it in half. You can see how it went up like this and it came down pretty fierce, pretty much like that. The symmetry is there. Like here it was chugging, 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 and then boom, we get this run up. So markets go out like they come in, and now we have the same pivot. If you look at this from yesterday, we have the same thing going on, from 2 sessions ago, excuse me, yesterday. That same thing is going on as well. So if the market came down this violently like this, we have a good chance, especially if the dollar is starting to correct a little bit, to hitting this upside target zone in a very short amount of time, giving the volatility. The overall trend has been up for this market, even when the dollar was going the other way. So this recent half of this move right here over the last 2 weeks is most likely fundamentally related because of the coronavirus, and because we have a little bit of an uptick in that region as well as the rest of the world, it's not unlikely that at least if this market is going to head back south as a bear, we might have the ability to get a correction up into this target zone and hit, at least scratch the 65, 68 level. The 66.16 upper part of the band might be a little rough, but then look at, we have this gap here. We all know the theory, the fundamental theory that all gaps get filled eventually. So wouldn't it be something to spike up, rush up here, and then if the virus becomes more of a problem, this continues to go down, or we may be setting the range for a very big sideways trade between this last higher move high at the end of the year and the low set from a couple sessions ago. So let's go look at another currency exotic cross now before we head into the US zone. Here we have the US dollar TRY. Now, no matter what, if the dollar index is selling off, the dollar TRY trade is probably still going to remain a bull. I would be very hard pressed as a bear trying to sell into this market. It's a buy dip scenario. I wait for a very strong valid sell signal before you try and sell into this, because you can see how even if it doesn't hold the newer highs, it keeps on running back up to them. So if you're going to sell into them, keep your risk tight, and I would say take your profits fast, because you're probably not going to get much of a trade to manifest off of that. So now let's go look at what's going on as another market that has been very interesting when it comes to the US dollar. The US dollar Mexican peso. Now here's one where it doesn't matter if the dollar is weak or strong, it's the peso is in a bull market. bull market. So it's a bear market for the US dollar Mexican peso. As you can see, we made a lower move high a few sessions back at 1883. That's going to be our upside pivot for the breakout to the upside. But we're looking more for a test of 1855 here on support. A failure from there continues this bear dropping like a rock, because this market, no matter what the dollar index does, it seems to be a bear, just like the US dollar yen happens to be a bull. So there's certain currencies that no matter if they're lesser crosses or if they're major crosses, they don't all trend together at the same time just because the index is going one way. But we have a lot of fundamentals that are driving them, but right now, for whatever reason, the US dollar and Mexican peso, it's not in that way. Now, the funny thing is, it has started to look like it's consolidating and trying to bottom. Well, we do have the trade agreement between US, Mexico, and Canada that has been done. The only thing is Canada has failed to finish signing everything, and they're most likely going to, but there's a little window dressing that needs to be done yet. So that may be one of the reasons why, because the trade agreement isn't totally complete, that this trend is continuing, or at least it's trying to bottom and waiting for some signatures, in which case maybe we'll get a bounce. But otherwise, right now it's looking like if your kids are going to spring break down in Mexico, it's going to be a little bit more expensive than last year. Now, we did have a sell signal yesterday that also goes against the dollar, and that would be in the US dollar, Canadian dollar. We have a bearish engulfing line sell signal that is continuing to hammer the market today. So the bears are exercising a nice little play off of this. Yesterday we were looking at it, we got that negative close, much more negative than we were looking at it originally yesterday morning, and confirms the bearish takeover right now. I mean, this market's been exploding higher for a month and a half. A little correction would be just, it's kind of normal. It's what happens. So now we got our signal. We've got follow through today. And it's also hanging, as you can see, where the market's at right now. It's right at where it was trying to base as it grinded this little top here that we made. So it's a short-term top. We're not saying that the momentum is going to be broken and we're going to be a vicious bear, but right now, because of the steepness of this slope, and if the fundamental corona thing starts to wear down, especially if the trade agreement starts to come together, with Canada finally locking in their signatures, in this downside target zone of $1.3139 down to $1.3094 is going to be a very, very, very likely target area for us to aim towards. Whether we hit it or not, that would be ideal. But right now, it looks like the bearish momentum is on our side. The bulls, if you haven't taken profits, I think now would be a good time to start to look to do so, because you might be taking heat all the way down back towards here. So it would be a shame to have lost the profits if you rode this rally up. Now, if we take a turn back to the upside and this move gets negated, if we take out this current swing high at $1.3331, well, then all bets are off and this bull is going to keep on going. Now, remember, the US dollar Canada has been in a very, very slow grinding downtrend for months. And when it's corrected to the upside, it's been very extreme. This is the strongest upside correction that we've seen in this bearish market for a while. We did make a higher move high. We took out this high swing high here. So we could be basing in the longer term, but even if we are, we're still looking for a correction back down into the downside target zone. Okay, so we've seen what is going on in front of the US stock market opening. And now the US markets, as we've been working our way through this video, are open, and we can see that there is not much that has changed. The Euro US dollar is still right where it was when we started our thing. So we'll see what happens as the United States markets are coming online now and everything gets absorbed from yesterday. We'll see how the news is. There's some numbers at 9 o'clock and today and around the world that still might have a little bit of a impact on some movement. Right now we're looking more to see if we're going to really hold this consolidation and basing and see if the US dollar index is going to make a short-term correction, because it's been a bull since January 1. Very odd that the US dollar has been able to be on such a tear. Like, even look at the Euro US dollar. Yesterday was the first positive day in 2 weeks, and even that since the beginning of the year, there haven't been very many. We haven't been able to put more than 2 or 3 together. Actually, yeah, we had 3 here and we had 2 here, and now ever since. But outside of that, for the most part, we haven't been able to put more than 1 and even when it's been positive, most of these positive days are very small in range and very tight and very small as far as the being upped on the day. And that's about all we have for today's session. We're going to keep on watching these things. We're at the middle of the week. We have our target zones. We have some buy and sell signals that have come into the market. We're going to see how they manifest. Now, the one good thing is the ones that we have pointed out today. We had the bearish engulfing line. We had the 3 inside up. These are very powerful, high probable Japanese candlestick patterns. If you'd like to learn how to trade these more in the Forex markets, the futures markets, the options markets, if anytime you come to our website page here at www.forex-trading-unlocked.com, you can toggle all the way down to any page, and then you will see a little thing right here for high probable Japanese candlestick patterns. And you can check it out here, or you can buy the Kindle or paperback version on Amazon.com. So with that being said, we want to thank you for your time today and hanging out with us on the workstation page of our website, which you can access from the navigation bar. And if you want to follow us on these signals and you don't have time to know when we're going to be coming out with them, just sign up for subscribe to our YouTube channel, and you'll be notified when we come out with our next live stream, or download any lessons for your use. And with that, we're going to end our analysis for today. Thank you very much. You have a good trading day, and good luck out there as we head into the middle half of the week.